I've probably gotten over 200 loans in my lifetime, and because my finances are complicated, it's more difficult for me to get a loan than your average person. So in today's video, I'm going to share with you 6 tips of things that I've learned that will help you get a loan for your home. My name is Shiloh Lundahl, and you're watching the improved channel focused on real estate investing. So the first thing you're going to want to do is to go to a bank and open up a savings account. That's right, you're going to want to open up a savings account, and you're going to want to put the amount of money that you would put as a down payment into that savings account. And then you don't want to touch that money for at least 3 months. You want to have at least 3 months of statements for that account, so that when you go to apply for the loan and they ask you where your down payment is coming from, you can show them these statements. One of the things that has been most frustrating in getting a loan for me is to show them that I have the money for the down payment. You see, I'm a real estate investor, and so I have a lot of money coming in and out of my account all the time. Some of that money comes from sales of properties, some of that money comes from loans and different things like that. And so if I have an account that a lot of money is coming in and out of, they're going to ask me to source all of that money, which means that I need to explain where every deposit over $5,000 came from. And if I deposited it from another account of mine, then they're going to ask to see those account statements too. So it can become a huge hassle to source your down payment. So the easiest way around this is to open up a savings account and put the down payment in that savings account, and then don't touch that account for at least 3 months, so that you can have at least 3 months of statements to provide to the bank when it comes time for you to show them where you got the money for the down payment. The second tip is to pull your credit report. That's right, you want to take a look at your credit report and see if there's anything on your credit report that shouldn't be there. That way you can take care of it before you go to apply for the loan. Also, you want to know what your credit score is, so that when you're talking to the banker, you can let them know that you just pulled your credit report, you can provide it to them, and you can look at the score in order to help you determine the rate that you're going to get. Now, I know that the bank is going to want to pull your credit, but what I would say is to tell them to hold off on pulling the credit until you can determine whether or not you want to get a loan with their bank. Let them know that if you go through the loan process and if you get approved, then you can go ahead and have them pull your credit before they close on the loan. And if they're not willing to do that, then they may just not be the right bank for you. Third, if you have complicated finances like I do, then it's really helpful for you to ask your accountant or your CPA to create a letter explaining where your income comes from. So they can write down all of the businesses that you have and all of the income that comes from those businesses. Then they can add back depreciation, and they can add back capital improvements if you're a real estate investor, so that they can see what your actual income is rather than what it looks like after depreciation and capital expenses, which is something that real estate investors use in order to lower their overall income so that they can pay less in taxes. Fourth, you want to work with a couple of different banks at the same time. I know loan officers are going to hate me for saying this, but you want to work with at least 2 or 3 banks at the same time in order to get the loan. The reason being is because all banks are a little bit different, and all banks have underwriters. And some of the underwriters are more sticklers about certain things than others. So you can be working with a bank and it can get you like 95% of the way to the finish line, and then they let you know at the last day, at the last moment, that you don't qualify for the loan. So not only have they wasted your time, but they've also wasted the time for the sellers. And it can be frustrating for everybody. So it's helpful to work with more than one bank at the same time. You can go and give them your credit report, you can show them your income statement and everything that you need to do in order to qualify. And then you just keep working with both banks throughout the process. You can even have them start competing against each other for better terms if both of them are willing to qualify you for the loan. So I would highly recommend working with at least 2 banks at the same time. Fifth, if you use credit cards and if you carry balances on your credit cards, it's helpful to get them all paid off before you qualify for the loan. And the reason being is because they're going to look at those credit card statement payments and they're going to count that as part of your debt to income ratio. So if you pay those off in full before the statement generates, then it's going to show that you don't have a balance and that you don't have monthly payments, and it will help you be able to qualify for the loan. Number 6, whatever happens, don't get into any more debt. I don't know what it is about getting a home that people think right before they get a loan that they're going to go out and buy a brand new car. That is like the worst thing that you can do, because they're going to count the payments against you in order to qualify for the loan. I don't know if people are thinking new home, new car, new life, but whatever happens, get the car after you get the new loan so that at least you can qualify for the home loan. So hopefully this video has been helpful for you. And if it has, if you wouldn't mind giving it some love, subscribe to the channel, give it a thumbs up. It helps me be able to know the content that you like so that I can keep producing good content in order to help you become a fantastic real estate investor. Again, thanks so much and good luck investing in real estate.